and it's 5 o'clock somewhere. And we are going to meet and talk about a couple things, PPP 2.0, and we've got Jeremy Stone, our banker. Jeremy, you can give a wave. And then we've got Andrew Schwartz. He is our CPA that we're gonna pick their brains. We're gonna ask questions. We're gonna see where we're all at. And what I would like you to do is, you can wave your hand. There we go. I'm muting a couple people here. You can wave your hand as a participant. Say, hey, I have a question. You can type your question in the chat, and we'll keep an eye on those. And we're going to go through just some application ideas. We're going to also talk about employee tax benefits that we have for paying people. We're going to figure that out with Andrew, some CPA stuff that's over my head. And so, Jeremy, I got some questions for you, but if you want to share your screen and give your spiel, now would be a great time to do that. And then we'll ask our questions in the end. And what I'd suggest for everybody, write down your questions as he goes through this.
So how do I share my screen, Eric?
Yeah, so down at the bottom, if you hover over the, let's see, allow participants. No. Paula, do you see the share screen button on your end?
Oh,
okay.
Yeah.
Hit that, and then you can share just a specific window, or you can share your whole desktop from there. And then click share.
How's that?
It is started. There it is.
Yep.
Perfect.
Can you guys see this all right?
Yes, we can.
Yes.
So this deck page was originated by Five Star Bank. That's where I work. I've been in the banking industry I'll give you a little background.
Yeah, please.
22 years in banking. I'm with Five Star Bank here in Chico. Our bank originated in Sacramento, the greater Sacramento area. Total assets are over $2 billion. We've got 8 branches, and we serve the North State of California. Let me start. So here are some PPP updates and some overview. The new program is going to run through March 31st of this year. The SBA has 10 days to entice the establishment rules and regulations for the second draw loans, which we already have. A lot of this stuff that you're going to see on here is redundant, and you might not need to know about it. I'll just kind of go over the items that are necessary.
Yeah.
If you did a PP round 1 loan, SBA has until tomorrow actually to provide a 1-page regulation to get your loan forgiven.
Quick question, Jeremy.
Yeah.
Does the loan amount matter? Does it have to be under 150,000?
It has to be under 150,000, correct.
Okay, because there are a couple who are just over that 150 mark who won't have that simple 1-page forgiveness. And since I've interrupted already,
It's all right.
is there going to be a chance that someone's going to say, the SBA is going, or Department of Treasury is going to say, you know what, if you're under 150, don't worry about it, don't fill anything out, you're forgiven? Is that ever going to happen?
It's hard to say. I mean, we just had an update from the SBA that they changed some of the rules on the PP2. So it's like, it's frustrating at times, but we are in a position where we're kind of ahead of the game from most banks where they're not even ready to accept applications. We've been having loan committees every day. The portal actually opened today from the SBA, so we can start getting loan numbers from them.
Gotcha. Thank you.
Let's see. So borrowers are required to retain relevant records related to employment for 4 years and other records for 3 years. The SBA is establishing a plan detailing the review of the forgiveness, and that's 45 days of the bill, and that the SBA must establish a plan by February 10th. So they're on the clock too. They gotta figure out what they're doing. And Paula, here's some tax information. Business expenses paid with forgiven PP funds are tax deductible. Can you confirm?
That's Andrew. So Andrew,
Andrew, sorry.
Yeah, Andrew, would you say you confirm that, Andrew, that we're going to be tax deductible on the PPP money that we got last year?
Last year, yeah, and this year, all of it.
Great.
Free money.
Perfect. There we go. Love to hear it.
I'm just going to scroll through. A lot of this stuff's not going to apply. This is more internal type stuff. Oh,
There we go. There we go. Yeah.
no, here we go. So I know I'm jumping around a little bit, but I want to plug this in. SBA loans. I mean, this is, in my 22 years, I've never seen this. Well, obviously we haven't seen a lot of things that have been happening in the last few years. But right now, the government loans, I don't know if a lot of you have heard of the 7A loan program or the 504, which is real estate secured. A lot of those programs can be heavy on the fee side for the bank and for the borrower. Well, those are waived, which is significant. And the SBA will pay up to 6 months of P&I, not deferred. This is paid up to $9,000 per month of principal and interest payments. That's pretty.
Yeah, I just saw something where the SBA's, if you have an SBA loan, they're going to make the payments for you for another 3 months.
Yes, that's correct, Eric.
Wow.
Yeah.
Oh, I got to let people in. Sorry.
I did. I let him in.
Okay.
Here, so we're going back to the 150K or less. The one page.
Oh yeah, there we go.
Hopefully by January 20th. In the interim, we're not processing any forgiveness right now until we get that one pager, because doesn't make sense to do so.
And just to jump in, if you got the $1,000 per employee EIDL loan right there at the bottom,
Yep.
it says will not be excluded from forgiveness. So just expand upon that, clarify that.
So several cases that we had for PPP1 where say a customer or a borrower received $100,000 in PP1, and they also had a $10,000 EIDL. We're calling them EIDL loans.
Okay.
The forgiveness was $90,000 because they got an EIDL loan. So they have to pay back that EIDL loan. Now, what is happening is the SBA is actually giving that money back to the borrower.
Yeah, refunding it back to them. Yeah. So to clarify, you should have gotten $1,000 per employee EIDL loan that was in addition to your $70,000 from PPP. So you got $79,000, $1,000 per employee. You have 9 employees. If you've already applied for forgiveness, they said pay that $9,000 back. If you haven't applied for forgiveness, they're going to say it's free and clear, I think. And then for those that paid it back, you could expect a refund, is my guess. Is that right, Jeremy?
That's correct, Eric. Yep.
Okay. All right.
I've had several borrowers who, we processed their loan, got it forgiven, and then it was the net amount. Obviously, for example, $10,000. They had to pay that back, but surprise, good news, it's going to get forgiven or they get refunded.
Wow.
Yeah,
Right.
that I know of somebody on this call right now in North Carolina that happened to.
So really, in a nutshell, I mean, from what I'm hearing from SBA, this round 2 is not going to run out of money either. I know.
Oh, okay, good.
Last year, I mean, it was people were scrambling, and they missed out. Actually, there was a first phase and then a second phase of round 1. I'm calling it. People missed out the first phase, and then they received funding for the second phase. Now with this, the money will not run out. Recognize with PPP2, I would say maybe 30% of the borrowers that received money in the first round are not going to be eligible.
Okay. And so let's talk about eligibility, but I do want to touch on something because you said didn't get PPP1. Is there anything that says if I didn't get PPP1, I just never went, I never thought I'd spend my money in my 8 weeks. I said, I don't want my hand in that, in the government or whatever it is. I was reluctant to do it. If I didn't get PPP1, is there anything that says I cannot apply for PPP2, or am I free to go ahead and apply?
Well, what you would, in that situation, Eric, they would be applying for PPP1. It's a different application. And the eligibility requirements are different. So that's happened a couple times. So does that make sense? So
yeah.
If I want to apply for PPP, never applied, then you would be in that PPP1 program.
Because that hasn't ended yet. That deadline hasn't happened.
That's right. Correct.
All right, good information. I know of one. We definitely have one client that Paul and I work with where they did not get that. I know of one that I can think of. So I see Ehab has a question. Ehab, why don't you jump in with the question real quick if it pertains to this?
Yeah, so I just applied for the PPP forgiveness just now when I was at work. because ours is 150 or more. So I applied and I gave them the documents. I started applying for the second one because they have a portal for that. My question is, so in the first one, we used income from the previous 2019, correct?
Salaries.
Salaries and so that calculated an amount over 150 for me, right?
Mm-hmm.
Now PPP 2, am I going to use the same 2019 numbers that I did the first application with, or do I use the new numbers?
So there's two ways, and Eric, feel free to jump in, but there's two ways for eligibility for PPP2. It's a comparison of 2019 and 2020 in any given quarter, calendar quarters recognized, of 25% or more. Or you can look at it as an annualized basis too. And that would be tax returns essentially.
So let me clarify those two
Say that
things.
again.
So let me clarify that. So second quarter, April, May, and June. You cannot include March, April, May. Jeremy and I talked about this. It's got to be April, May, and June, where you're comparing 2020 collections to 2019 collections to see if you qualify for PPP2, in which case you have to show a 25% loss. Most of you are going to show a 66% loss in that quarter.
Yes, we did. Mm-hmm.
Some will not. They will have exceeded because they came back earlier than others. They only missed March and April, and May and June were gangbusters. So that's a bummer deal. Most of us are not in the dental field are not going to show an annual loss of 25% or more. So you're probably going to have to focus on running a QuickBooks profit and loss annual comparison, previous year comparison for just the second quarter. And it'll literally throw your collection numbers up next to each other, and it'll show you the decrease of 25% or more is what you want to see. That says I can apply. That's what Jeremy's saying. Now, Jeremy, what Ehab's asking is when he applies and says, hey, I need this much money from my PPP quote loan, and my salaries in 2019 qualified for $160,000. But when I look at what I paid my employees in 2020, they were on unemployment and all that sort of thing. It's going to be much less. So is it the same amount of money that we're applying for in this PPP 2.0? Yes.
Perfect.
Yeah, it was, I think the formula was average payroll cost times 2.5.
Yeah. From
which?
Yeah,
year?
February of 2019 to February of 2020, right?
Right, correct.
Yeah.
Oh, okay. So I'm using the same exact numbers I used for the first PPP loan. Okay.
Yep. And you should get the same exact number back. However, Jeremy, let me throw this in there. I've had clients where they forgot, the dentist forgot to include their $10,000 maximum pay in their application. They got like 33 grand, So if my numbers were incorrect the first time, can I fix it the second go around and get more money because I messed up the first time?
Absolutely.
Okay. That's really important, guys. If you didn't get the right amount, make sure to include up to $10,000 ceiling for yourself in your pay. And we'll have Andrew talk about that in a little bit as well, how to figure that out. Surprise, Andrew. All right. Keep going, Jeremy. What else?
That was it on my PowerPoint.
Okay.
That's all we
All right.
really had.
That's good.
If, we have internally at Five Star Bank, when I give a customer a loan application, it has an Excel worksheet, and I can see if I can pull that up, Eric. It might be worth.
Mm-hmm.
So I give my borrowers this. Can you see this Excel program?
Yeah, but we need to talk about your desktop, Jeremy.
Oh, it's a mess. I know. It's a mess. So we give this to a client, and they fill in the blanks here, and then it automatically puts in, the monthly payroll, and then boom, it'll say if you're eligible. It'll even calculate how much of a loss you have if it's 20% or more. It's a pretty cool little worksheet.
Yeah. And do you want them to funnel the request for that through me, Jeremy? I can send it out in an email to everybody, or do you want them to ask for it from you directly?
What's easiest for you, Eric? It doesn't.
I can just send it out. Yeah. If anybody wants this, most banks are probably going to have something like this, but if you want this, you're welcome to email me for it. Jeremy sent it to me. I have it.
Yeah.
All right. Awesome. I know we have more questions in regards to applying for PPP. We have one here. So Dan, please email me because I won't remember. I see people saying, please, iPhone is requesting send one to me. I don't know who that is. Email me, email me, and I will send it out. In fact, I might just send it out to everybody if that's what everybody wants. I'll just reply. You got an email from me today. I'll just get it out to everybody. So I'll make a note to do that. You don't even need to ask for it. All right. Let's see. Paula, questions you have for Jeremy?
I think he's covered pretty much everything. I had the quarter question because that's come up, as you know, we're doing the math for people on if it was March, April, and May, that would be sweet, but you got to follow the quarters. It can't be just any 3 months. And the annual basis, yeah, I don't think that's going to hit too many people. I did like the idea of you can, if you didn't get the 10,000 for yourself, go back and fix that for this next.
Yeah.
And the EIDL, you can apply for that refund because that has happened where people had to give that back.
Yeah, you don't even have to apply for it. SBA will just send you the money.
Oh,
Yeah.
really? You don't have to
It's just
apply.
going to show up in your checking account. That's a good
Okay.
deal.
Surprise.
So Jeremy, I have a question here from Dr. Spencer. I think the question is the 10,000 for doctor per month or for the total? So just explain how they include their own salary ceiling in the application. Let's say my employees cost me, I don't know. Typically I say about 18,000 every other week. So let's say my employees cost me $30,000. Okay. And I get 2.5 times that, but I want to include myself in that. How do I figure out what I pay myself and what the ceiling is and how I add that to that 30,000 per month average?
So it's up to 100,000 per owner. I guess.
Okay.
So
Yep.
up to 100. So 100 divided by 12. There's your number.
So 8333 is the amount I'm going to put on the application for myself. So now what I'm applying for is $38,333 times 2.5, correct?
That's correct. You got it.
So you would just do the math, guys. I'll do it here. So 38,333, right? Times 2.5. I'm at almost $96,000.
That's
Okay.
right.
All right. That's the average, maybe a little bit above average payroll number. Okay. I hope that makes sense. Dr. Spencer, if not, you can ask the question again or raise your hand. And then another question here for me, Eric, since we're applying, are we going to need to resubmit the supporting documents since it's the same information? Well, this is what I thought, Jeremy, was go through the same bank you went through before, and it should be a click of a button, right?
Not necessarily.
Okay.
Because there's quarters that we probably don't have a lot of the 2020 quarters from the prior year. I'm requesting all new documentation.
Okay.
The 941s per quarter.
Okay.
IRS. So it's a pain. I mean, I'll tell you, paperwork is not fun, but we're working with the government here. So.
But money is. So we want to do no, I'm just kidding. Sorry. What was it, Paula? Money won't make you happy, but it sure will help you enjoy your misery in some pretty nice places. Is that
That's
what it was?
right. That's right.
I like that. I love it.
And I've done some math with several clients, and they've actually maybe that drop for the year when we're looking at their annual comparison, the PPP money they had actually put them even or ahead by the time they added that back in when they received that. So it's really been helpful, been very helpful.
Yeah. Yeah. Let's see. Can you apply for just the Miss Doctor salary in Triple P2? I'm not sure why wouldn't we want to get all of it, Monica? Can you clarify that question? I think you'd want to get all of it, not just doctor salary, but I guess, Jeremy, could they apply for less money?
Well, yeah, exactly, Eric. I mean, just the SBA is giving out free money essentially. So just maximize your benefits is what I would say.
And we don't know where taxes are going to go this year. And so, I mean, Andrew, we're going to call on you for that here in a minute. So it might be good to, even if you don't spend all this, kind of stash it away.
Yeah, for a rainy day, especially.
No, so I would maximize, the total. I mean, can you get less? I mean, I'm sure you could.
So here's some questions, Jeremy. Just correct me if I'm wrong. Who should we be expecting the one-page loan forgiveness form from? I would expect the bank you got the loan from, right?
That's correct.
To reach out to you for that. My bank reached out to me and said, hey, we want to do this. I actually applied for forgiveness by text, so that's new.
Oh,
He
wow.
filled it out for me. So that's my banker, my small little bank, Jeremy. So let's see. And then how does this compare to SBA loan funds? Well, in SBA, you got to pay back, right? This is completely forgiven.
Yeah, I mean, technically they're both SBA. This is all SBA funds.
Yeah.
This program is just essentially for the PPP, and it's forgivable funds.
Okay. All right. Good. Yeah, I think
Other loan programs, the SBA 7A for like, yeah, you have a dental practice, you want to do a purchase of real estate or buy a practice, that would be a 7A loan. If
Yep.
you want to buy the real estate, maybe you've been leasing for quite some time and you're at a timing now that you want to buy the property. There's some great small business programs right now.
so would you say now is a good time to go get an SBA loan for something like that?
Absolutely. The real estate, gosh, I mean, 10% injection of the total cost. Conventional money, if you're just walking to your bank and say, I just want a conventional commercial loan, you're looking at upwards to 30% down versus 10.
Wow, 10% down. Okay. All right.
I have one more question before we jump.
Yeah, Paula.
Just to clarify, because you mentioned the PPP loan is tax deductible. Are the expenses, did that pass the Senate where the expenses on you're shaking your head, Andrew.
Andrew's shaking his head. Jeremy's shaking.
That's going to be an Andrew question. Okay.
We'll get to Andrew on that one too.
All right. That's good news. Yeah.
All right, Jeremy, hold tight because we might come back to you with some questions. We'll switch over to Andrew here. We're going to jump into some accounting stuff. Now, keep in mind, Andrew, this is a group of dentists, so you're going to have to slow it down. Okay. All
I
right.
could dentist all day. My name is Andrew Schwartz. I'm partners with my brother Rick Schwartz in the CPA firm Schwartz & Schwartz. We're right north of Boston in a town called Woburn, Massachusetts. Each winter we prepare about 2,000 personal tax returns. 90% of those are for physicians, dentists, and psychologists. The rest of the year we work with about 300 1- and 2-owner medical and dental practices, about 250 dental practices. So we're familiar with the issues affecting you guys. So I spend all day now on Zoom. I used to drive around a lot around Boston and meeting with dentists. So let's see what's going on. And we put up some pretty good information, I think. And we're going to start out by talking about the employee retention tax credit, right?
Yeah, that would be amazing because there's a confusion there.
Yeah, so we put up this thing the other day on our blog, and it's a very simple formula, and it says PPP plus ERTC equals opportunity for practices that were temporarily closed. I didn't do a PowerPoint presentation. I know I was supposed to. All right,
You do not have to. You do not have to. This is great.
They didn't tell me. So when this whole thing came out in March, I was actually supposed to go to the Celtics game on Friday the 13th, and I was going to go until the 11th when they canceled the season, and then everything hit the fan. And then late in March, they came up with all these rules. And originally the rules were very simple. You had two choices. You could either apply for the PPP loan, or if you don't want to apply for the PPP loan, you get this great tax credit that is equal to 50% of the first $10,000 you pay each of your employees between April 1st and the end of the year. So that was nice and simple. And it was, it was as specific as the rule we were talking about the idle advance having to be repaid when you do your PPP loan forgiveness. But of course, everything changed. So on December 27th, which I think this took people a little bit by surprise, they basically said, even if you got the PPP loan, don't worry about it. You can still now take advantage of the employee retention tax credit.
Wow.
Yeah. So now you can't use the same payroll costs for the forgiveness calculation that you use for this tax credit, but it's a huge deal. Now, to be eligible, basically they say if your quarterly collections for any quarter are less than 50% of what the collections were the same quarter of the prior year, then you're eligible to take the employee retention tax credit for that quarter and for the subsequent quarter. And if the next quarter you no longer have a decrease in revenue by 20%, then you're done with that ERTC. So
Let me just clarify. I want to make sure that I understand this because I'm slower than any dentist in the room. So I want to make sure I understand. So in the second quarter, almost everybody in this room will show about a 66% loss. Some not so much. But you're saying the minimum is 50% or more loss quarter two, because that's where it's going to be for us, 2020 versus 2019. If I can show it.
But there's an or there.
Okay.
Or if your practice was required to be closed by government order, you also qualify. So that's most of the states. I think some states didn't close the dental offices.
For one day. So for one day, if I was closed, I qualify. I
don't know. They just say what I said. So I don't know whether it's one day, but.
So let's say I have 17%. Like I have a client who has 24% loss in the second quarter. Okay. He's like, okay, I can't get triple P, but because he had to be closed, he could then qualify for the ERTC.
So that's the current guidelines that are on the IRS.gov website. I think that they're going to, they have to issue better guidelines. There's no guidelines. Nobody knows how to get the money back. So hopefully as part of this whole process, they'll address things like that. But the wording, is that it's if you're required to be closed. So almost every dental office will qualify for this. So the opportunity comes up where the employee retention tax credit only counts for wages. It's the first $10,000 that you pay everybody between April 1st and September 30th for most people, where the forgiveness calculation includes a lot of other stuff besides wages. So what we're suggesting to our clients is, first of all, don't rush to do the forgiveness. The rules are still changing, and there's no reason to rush.
Yeah.
But when they do the forgiveness, they want to do whatever they can to maximize the portion of the PPP loan forgiveness that's going towards the non-payroll costs, and up to 40% can go for facility costs, can go for utilities, and then what also counts is retirement plan contributions for everybody except partners and sole proprietors, and health insurance for everybody but business owners. So there's a lot of other places where people can submit for the forgiveness that doesn't touch the payroll, and then that leaves the payroll costs available for this 50% tax credit of up to $5,000 per employee, and it's big money. So the only issues are how the heck you're going to get the money, but they'll figure that out.
All right, so I want to clarify because I've got questions that I think clients are asking right now. This is where I have the double dip question. If I'm paying, let's say I got my money, I don't know, early, maybe early, like May 1st, April 15th, I got my money. I got it really early, okay? And I was 24 weeks, okay? So now it's October 15th. I didn't use my money to pay my employees. I paid them out of triple P money for 24 weeks. How am I getting $5,000 per employee in that second, third quarter range if it wasn't even my money I was spending to pay them?
Let's say you got $100,000, you can use $40,000 for rent and utilities. So I don't know, over 6 months if it's going to be that high, but a big chunk of it could be that. And you can also include the retirement benefits that you pay for yourself and your staff, except if you're a partner in a partnership or a sole proprietor, and health insurance paid to not yourself and none of the owners. So, but there's places to put the money that leaves. That means there'll be less going to offset the payroll.
Okay, so when people who have already applied for triple P forgiveness and they were like, I'm just going to apply, I got $50,000 and I'm going to say all 50,000 of it went to payroll because I don't want them risk not forgiving it. So I just put down on there all 50,000 went to payroll. Are you saying that's possibly a mistake?
Yeah, and that was a strategy. Everybody who was in a big rush to get the forgiveness, the strategy was just put everything to payroll. That's easier. You can provide less documentation. And we were telling my clients, like, slow down. This is still fluid. There's no rush. You have till July or August next year to submit the paperwork for forgiveness. So the rules are still changing. If anybody asks, like, just you don't have to apply for forgiveness. Some people did benefit. Some S corporation owners who applied for forgiveness and got it before the end of the year actually did benefit, because now that the whole thing's not taxable, it's going to let them take the money out sooner. But besides that little wrinkle, there was no reason to rush.
So go ahead, and there's a couple people just joined. So share with us, we're just going to put a pin in the ERTC for just a second because some people just joined us. Share with us how triple P money is tax-free.
How's it tax-free?
Yeah.
So if you got triple P money, and so traditionally, if you have a loan and the loan is forgiven, that's called cancellation of debt, and cancellation of debt is taxable. When they came out with this originally, they said the cancellation of the PPP loan or the forgiveness of the PPP loan will definitely not be taxable. Now, as everybody's aware with all the discussion that went on, is the IRS did they issued 2 or 3 pieces of information saying, hey, okay, we know that we know for a fact that the forgiveness of debt won't be taxable. However, the expenses that you paid with the PPP loan that's forgiven won't be deductible, essentially making the PPP loan
Taxable.
taxable. Thank you. And on the most recent stimulus package signed into law on December 27th, they completely reversed that, which was a huge tax windfall for anybody we were doing tax planning for.
Yeah.
So now the money is we're moving it to a liability. It's no longer income to anybody.
Okay.
That money can be taken out. Now the problem is, if most dentists operate as S corporations, and there's this whole issue with S corporations and when they can take out the money without having distributions in excess of basis. So when the money is free to take out with no tax consequences, and it's really going to be the year that it's forgiven.
2021.
So we actually had people look at repaying some of their distributions before December 31st. But otherwise, it's money. When that loan is forgiven, basically that money can be taken out of the practice, given to the owners as a distribution and not be taxed.
Okay.
As long as the money's spent, but the money was spent, you're moving other money out to yourself. You know what I mean?
Yeah. So I want to back up because I just wanted to hit that because some people came in and so I want to make sure I can summarize this in hopefully layman's terms here. As they say in your neck of the woods, Andrew, you sound wicked smart. So that's my California version of that. So we'll see.
Yeah. I'll give you a B-, maybe.
Yeah, wasn't that good. Yeah. So with Triple P money, where we put that on our profit and loss statement, we probably need to ask our accountant where to put that. Most of us probably just went other income, would be my guess. And then we had line item, payroll expense subtracting that money. And you're saying it should be probably identified somewhere else on the profit and loss.
No, we moved it off the profit and loss to the balance sheet actually right now.
Completely. Okay. Yeah,
and then when it's forgiven, when it's forgiven, we're thinking about just putting it right into equity. It's not income. We don't want to even risk that.
We don't see it showing up. Okay. So hopefully everyone's listening right now, paying attention. Your accountant becomes really important with making sure that money is tax-free. Because if you try to do your own thing or report something and include that Triple P money in there, it doesn't count. It's not included in your collections, right? It should not be in there. Okay.
So back to the ERTC, I do want to point out, it's not an income tax credit. It's a payroll tax credit. So when they finally come up with the rules, you're going to want to work with whoever processes
your payroll
at your practice to
I gotcha. Okay. So let's summarize that again. So I paid through my 24 weeks through October 15th. And now I'm realizing I should not have classified my Triple P money as all payroll in my forgiveness. Is that going to somehow mess me up in getting this ERTC employee?
Let's see what the rules are and what they say. I don't know.
Yeah.
So in theory,
hopefully we all spent 60%, the minimum, on payroll in order to qualify for this as well.
Yeah, but keep in mind when we got the money originally, what did we got? We got 2.5 months of payroll, and then they gave us 24 weeks to spend it. So most people should have leftover payroll. It would be the last quarter though. It would have been like October, November, December would have been their pay that they would have used their own money on, right? Yeah. Well, we'll have to see how it all comes together. It's okay. Like whatever they get, it's more than they would have gotten. Sure. Yeah. No, in theory, I've got 8 employees. Well, let's just use, I've got 6 employees that I pay, not including myself. Yeah. Potentially, I could get $5,000 tax credit on 6 employees. That's $30,000 tax credit on in some form. It's going to come back payroll taxes. Maybe. Does that sound right? So then it depends on that sounds right. So it's the timing. So it's you have to hit the 50% decrease to qualify, or you have to be closed. And then each subsequent quarter, you need to have a decrease of 20%. And they'll only have the 25% loss in the second quarter only. So it's only second and third quarter. So I feel like we've spent our Triple P money in that same quarter. That's right. So there's definitely an overlap. But for 2021, they made it even better. So for 2021, if your practice revenue falls by 20% for the first quarter or the second quarter, you get a credit of 70% of the first $10,000 you pay your employees each quarter. So
Okay, let me ask you a question. So what if, because here's the thing, you're talking about last year comparing to 2019. We're going to destroy 2019 in dentistry, 2020 in dentistry. 2021 is going to make 2020 look like it.
Oh, you compare it to 2019. So
Okay,
So,
gotcha.
you look at
So
your first quarter 2021 to your first quarter 2019. If you're down by 20%,
okay,
then you get a 70%.
probably not.
You get
Probably not.
$7,000 each. No, probably not. However,
Probably not. If they're mine and Paula's client, they're not losing 20-25%.
Not in the first quarter. No.
Not in the first quarter. Second quarter, yeah. I think if anything, honestly, Andrew, dentistry is moving in a very good route. I mean, I've got some clients, a few specifically, who beat 2019
Yeah.
end of year. So I think we're moving in the right direction. So I don't think we're going to qualify for that 2021. But if you're on this and you're listening to this recording or whatever, and you're like, wow, I'm still really struggling. I'm getting a lot of cancellations in my area and patients aren't showing up because of COVID fear, whatever that is, you show that 20% is 20%, right, Andrew?
Yeah, or you can't go anywhere, but say you want to take a nice 3-4 week vacation, the government's going to pay you $7,000 for every $10,000 you pay your employees. So you get a nice little windfall there coming back, but there's nowhere to go.
You're saying take your vacation the first quarter is what you're saying.
I'm being facetious. But the thing you said about a lot of your clients having their revenue go up, that's a whole nother issue with the provider relief fund self-reporting issue. I don't know if you've been following that thing. So anybody who got the provider relief fund, first they got 2% of their 2019 revenue, and then there was phase 3 that paid some practices a ton of money.
3.5.
No money. Well, there was supposed to be the self-reporting period which was supposed to start on Friday. That was going to go from January 15th to February 15th. And you either had to show how you spent the money, or you had to show that your revenue was down. So if you have clients whose revenue for 2020 was higher than the year before, I don't know how they're going to show that they spent all that PRF money.
So let me, I want to clarify. This is the HHS, Human Health Services, 2% funding. And what he's talking about is I'm a $1 million practice. I went and got 20 grand. Boom. I have that. And I was told I need to track my receipts on how I spent that money. Now we were told in the medical field that we had to spend that money on PPE, equipment improvements. And then I went and I applied again, and I got I know there's somebody on this call that got 20,000. They got $35,000 second time. So they got $55,000. Now what you're telling me is I got to be able to show that I spent $55,000 on equipment. Correct.
But the wild card is if you can't show how you spent it on equipment, you can show that you used it to make up the shortfall in revenue and collections. But if your practice was up,
that practice I'm talking about beat 2019.
Okay, so they better start finding receipts in a hurry because they got to come up with $55,000 worth of expenses not paid by PPP, not paid by other things.
Sure.
But the good news.
But let me ask you a question. I thought it was until June 15th or 30th of this year to spend that money.
But then, then they said, if you go and you can't show how you spent the money and your practice wasn't down, we're going to give you 6 more months to spend the money. So the thing was supposed to go live last Friday. So we try to put stuff up every week up here on the Schwartz and Schwartz blog there. And so on the 15th, they don't even post it in a very demonstrative way. On the last question of a FAQS, it suggests that they're not ready to accept this information, and the whole thing is postponed indefinitely. Wow. It's the whole thing's a mess. It's going to be like the PPP where they at first they wanted all this, filing and all this information that no one's going to look at, and at the end of the day, it's going to be.
Okay, that's good news. So I was sweating right there for one of the doctors here. So let me ask you this. Under the HHS, what can be used that is, quote, forgiven? That's only PPE expenses, correct?
No, I was reading through the thing over the weekend because the Patriots weren't in any of the playoff games.
Get used to it, buddy. Get used to it.
I mean, you either watch football or read about the HHS provider relief fund forgiveness rules. It's a lot of stuff. It's general and administrative, and it's health costs. It's really I spent some time reading it. I couldn't even tell you. I was so happy when I saw that I read that it was delayed indefinitely. Yeah. I have no idea, but it's pretty. It's a lot. It's a lot of what the practice spends. Counts.
Keep your receipts then. Anything so it sounds like to me could be office supplies, could be dental supplies, could be your PPE, could also be that you go buy. I know there's a practice on here. They went and bought the Radic 8 system through Henry Schein for all their operatories. They spent the what was it, like $2,800 per unit. They equipped four operatories. They spent the 12,000. They went, here you go. You know, they put the tower in the reception area. Yeah. And then we market the safety aspect of that. All right. So excellent. Excellent, Andrew. That's awesome. Let's see. Anything else on the employee tax credit that you want to tell us about? Because that's very confusing.
No, it's very confusing. That's what I want to tell them. Just stay tuned for rules. Like who knows? Like they don't.
Okay.
Everything I read, there was some suggestions of how it's going to work. I don't know if you need to amend the old 941s. They have that new form 7200. Maybe that's going to do it. Somebody said that there's going to be a place just to pick up the credit on the first quarter 2021 941. So I don't know, but someone has to give some guidance. But there's just the guidance is so slow in coming and usually pretty slim.
Okay, so let me ask you a question. First of all, Jeremy's thinking, I'm so glad I'm in banking. That's the first thing. Secondly, should we even bother thinking about applying for the employee tax credit right now? Should we just hold off and be in contact with our CPA, read this? I mean, we don't really know the answer to that, right? When to apply
there's no
for
way.
this.
Nobody knows.
Nobody knows yet. So we're a little early on that game. There's no rush to try to figure out how to apply for this. It won't be with our taxes this year, probably. It'll be something else we apply for, addendum or something, or?
Well, yeah, you have to, it's a payroll tax credit, so it's going to have to be with an amended payroll tax form. It has nothing to do with your corporate tax form, with your individual taxes.
Perfect. That's good to know. So if you wanted to go file your taxes before April 15th, and this hasn't been clarified yet, you don't have to sweat it. Does that sound right?
Right.
Can I ask a question? Andrew, I read a blurb that we are not able to file taxes until February 12th. Is that correct?
I saw that blurb today. Yeah, most people can't anyways who have anything going on. But yes, I think February 12th, it's going to be a mess. There's no other accountants out there. But if you're married to an accountant, I think it's going to be July 15th again. It was terrible. It just went on and on. So July 15th didn't do anybody any favors, actually.
I also saw a suggestion to file for an extension this year.
I think there's going to be a lot of extensions, yeah, because one of the problems is the federal government said how they're going to handle the PPP and everything. The states all have different rules, so that's going to be a problem. The rules are still changing. It's just to file without an extension, most of our returns on a regular year is hard when there's not all this stuff going on. So, yeah, I think there's going to be a lot of extensions.
Okay.
It's no big deal. Extensions are no big deal. I do my tax return on October 14th every year. As long as the money's paid in, it's no big deal. It's just that's just the paperwork. They don't want the government wants the money.
All right. Quick question posted here. Someone already applied for PPP forgiveness, showing payroll expenditures as the major expenses on their application. Jeremy, you might want to jump in here too. There's no way to change that now. It's already been done, right? So now applying for this, the employee tax credit probably is going to limit them.
I would think so, but they can I would say that they could redo the calculation, not to submit to the bank, but on
personal level.
Personally, and if they ever get audited, which they're not, because there's very little enforcement, say, listen, I sent this in early on before the rules changed. Here's how I should have sent it. Yeah. There was no way to amend it, but here's my numbers. That's why I think I'm eligible.
Jeremy, thumbs up on that.
Just make sure everything's documented and you keep a track of it.
So I have a tracker, an Excel tracker that we sent out, Paula, last May. We sent that out where it just says, it's just almost like a checkbook ledger. You just took your PPP money that you got and you had divided your money. It says 60% of it should be paid on payroll and 40% over here on everything else. And you just line item every month what you spent on it. That's all you need to do. Does that sound right, guys? Andrew, Jeremy? Yeah. Okay. So you can go back. The person who asked this question, I don't want to say their name. You could go back and redo your Excel PPP tracker, okay? And you could just put your total PPP money you got, look at your dates of your payrolls, look at 60% when that maxes, and then fill in the blanks on your rent, your utilities, and it's been so long now, Andrew. What's the other thing, Jeremy?
Mortgage interest, I guess.
Interest. Yeah, mortgage.
So rent or mortgage interest, one or the other. Utilities.
But it's also health insurance and the retirement plan contributions. I think you start with the other ones and then you backfill the payroll.
And then payroll ends up being you just want to get to 60% of the payroll. And so not included in payroll would be the health insurance and the retirement. Those are not considered payroll?
Right. It's a payroll cost for when you apply, but it's not.
I'm on a webinar right now. Can I call you back?
Yeah. And plus, if you have the 26 weeks, some of the weeks are going to be after September 30th, so you use that for the PPP. That I don't. We have to think it through. We have to see what the rules are and how to document it all.
And I have someone clarifying here, and I don't know if Jeremy should answer this question or Andrew. Just clarify again, if the owner didn't include their income, the 8,333 in triple P1, can we add that to our triple P round 2 on top of their payroll costs? I think we covered that earlier, maybe before they got here, but yes, yeah. So your triple P2 money can be different than your triple P1 money application approval, right?
Another mistake people made, and I know our clients did it because the rules that people were applying so quickly and the rules weren't really written.
Yeah.
I know we capped a lot of our W-2 employees of S Corps, the owners who are W-2 employees at 100,000, but the amount you can do is 100,000 plus the retirement money. So if people, so now that the rules are more solidified, I think a lot of practice owners are going to be able to apply for more money. But the retirement for S Corp owners is over and above the 100,000.
Only if you're incorporated then, guys. Yeah.
Yeah.
Okay. Let's see. Anybody else have any questions? Man, we did awesome. That was a lot of information.
Can I just throw out one more thing?
Please, yes,
okay.
keep going.
So if anybody is unincorporated, the FFCRA, where if you had an employee who was exposed to COVID, you can pay for 2 weeks. If unincorporated, you can take that tax credit of $5,110 if you were out of work for 10 days because of COVID on your personal tax return. So
let's say I'm a dentist and I'm not incorporated. I'm a sole proprietor, and I obviously don't go out and be sick for 10 days and pay myself through FFCRA. Okay. I don't use that. You're saying I can apply that as a tax credit somewhere
on your personal tax return. So when you file your taxes, you need to tell your tax guy that you missed X amount of days and it's $511 a day.
Hey, I got a win out of this. Look at this. I get something. Look at that.
Yeah.
That'll be me, Andrew. Hey, the flowers are in the mail now, Andrew. All right. That's awesome. You saved me so much. I love that. That's a great nugget. Any other nuggets, Andrew, that you want to throw out there?
No, that's
that we could quote you on and hold you to.
No, this stuff, I think it's all right, but that one's right. They talked about it at a course I was at. I forgot about.
That's great. That's great.
Huge. Yeah.
Let me just summarize FFCRA for those of you who have been listening when I talk to you during our coaching calls. So that was supposed to end December 31st. It was extended to March 31st. And what that means is, I don't know, Families First, Coronavirus Relief Response Act, something like that. It's through FMLA. That what Andrew's talking about is the ceiling to pay any employee is up to $511 per day of their normal wages, dollar for dollar. Now, if you have someone who just gets paid $300 a day, you just pay them $300 a day. Their outlets, they're required to quarantine. They're out, quote, sick or exposed. They get paid up to 10 working days, whatever they normally would work over a 2-week period. So if they're a 2-day-a-week hygienist, Andrew, we'd only pay them 4 days over those 2 weeks, right? Okay. Yeah. Up to $511. And what he's saying is 10 days times 511 is $5,110. And so you pay your employees through your payroll company identified as FFCRA pay. The payroll company will then notify the government so that money is automatically deducted from your payroll taxes immediately. So you're getting dollar for dollar reimbursement from the government to have your employee at home for those 10 days. Does that sound right, Andrew?
Yeah.
Okay. That's been extended now through March 31st. It is voluntary. Paul and I recommend that if it's a legitimate situation that you do it. It doesn't cost you anything other than your employee being out. You don't want another disgruntled employee if it's a legitimate reason. Now, if somebody's trying to be frivolous and abuse this, and that's something we should talk to you one-on-one about and figure out.
Yeah.
Sound good?
High cost, because you do have to do the matching payroll taxes still, but it's a very small cost.
Small
It's
cost.
a good,
Okay, good
it's a
point.
goodwill to let your team know that it expired, but you are willing to carry that forward to March.
To March 31st.
But we actually had clients who didn't do it. They were worried it was going to open the gates and every employee would want their 2 weeks paid off. Because all they have to do is say they got exposed. It's not right.
Yeah.
It's crazy.
It is.
There is no tax break for employees I don't give that money to, like for myself, though?
No, you can probably do yourself, right?
No, what I'm saying is, let's say like you were talking about, I'm non-incorporated. I'm not an S Corp. I'm a sole proprietor. I get my 10 days that I didn't pay myself. What if there are employees who didn't take advantage of it? I don't get a tax break on not paying someone for being home 2 weeks, right?
No.
Okay. So we have a question. Does FFCRA require the time off to be in addition to their sick pay? I think what he's asking is, do I have to pay them sick pay first and then FFCRA, or can I go straight to FFCRA pay?
No, the FFCRA just kicks in right away. They don't want the employees to feel like they have to come to work and get paid. It's just so they can quarantine for the 2 weeks.
Yeah, they'll still have their sick pay after these 2 weeks are paid to them through the government. Yes.
Right.
Yeah. So they get to be sick 13 days this year if you give them 3 days. Is it additional time off? I'm not sure I understand your question, Ted. Why don't you unmute yourself and just jump in, Ted?
Yeah, the pay is one thing, but the time off is a different thing because they accrue time off. And so if they've used 5 days now, and they have 10 days total for the year, they still have 10 left. Are they required by the law? Or can I say, no, you use 5, FFCRA paid for them? But
no, if the government's reimbursing you for what you pay your staff, I don't think you can also use their days off. They're not there because they've been exposed to a very contagious disease, right? So
no, that's not really the question. The question is about the time off that they're allowed for sick leave.
Oh, I don't know the sick leave in your state.
No, it's fine. Yeah, the state is requiring. Oh, Maine's got a weird law. You probably heard of it.
In Maine? Yeah. What's Maine's law?
The PTO, the paid time off requirement for all employees of minimum of 10 days, and they can use it for if they hiccup, if they decide, well, that means I need a day off today, for anything.
So what did they address this one issue?
Well, you're required to give every employee paid time off for whatever they want, including sickness.
Okay.
And so then it becomes, well, how many days off do people get in a year?
I don't know, but it's
so I guess the real question comes down to, okay, they got this, they're required by law, I'm required by law to give them at least 10 days, no problem, we do that anyway. But if they were out for COVID, does it add on some more days to that? Or is it included?
I would say it differs by state, and somewhere that has to be addressed in the state. They're getting somebody asked that question and it has to be posted somewhere.
The way that works, we've looked that up. It's 1 hour, you have to pay 1 hour of PTO for every 40 hours worked, which is the equivalent of 0.025 hours per hour worked. So it's basically 2.5%. Almost everybody that pays time off pays that already. You don't have to pay it when the employee wants it or anything of that sort. You can pay it all at the end of the year if you want to. The only place it really comes into a challenge for any of us is your part-time employees that don't get benefits. I have a couple employees that work just 1 day a week, and we have our janitor on payroll. We're gonna have to pay them PTO. It is just 2.5%. That's the way that thing works.
Well, it's when they take the time off that they get paid. It isn't just like a bonus. It's actually time off that they get paid.
They do
And that formula, I'm sorry?
You don't have to pay them whenever they want to take time off. You can say, I'm not paying you that till the end of the year. I don't think you have to do it right when I don't think they can just say, I'm going to take tomorrow off and I want to get paid.
I think that's the way I understand the law, but
So
for those of you too, but
those of you who aren't used to this, Ted and Dave get in an argument every mastermind group. So,
And they're both in Maine, so it doesn't apply to everyone. So
and plus, Maine has crazy laws, and they just passed a new crazy law. So.
Yeah, there are several states who just passed some new laws like that are just. Really
so I have a question for you, Andrew, here on the board. This client is a LLC.
Yeah.
And he's wanting to know, because he actually had to be out for the 10 days.
Yeah.
And he's wanting to know, as an LLC, should he have paid himself up to that $511 per day payroll through his payroll company, or should he What should he have done? Do you know?
No, he's going to take that credit for $5,110 on the personal tax return. So
Okay.
an LLC that doesn't elect to be treated as an S corporation, the owner cannot pay themselves as payroll. So the $5,110 comes back as a payroll tax.
So
I mean,
you'll
as
get,
an income tax credit on its personal tax return.
all right. So Dr. A, you get the tax credit, would be better. Okay. Sorry. Yes. Okay. He said, thank you. All right. Awesome. And then Dr. Liu, you unmuted yourself. Did you want to say something? Maybe an accident. Okay. All right. Awesome. Thank you so much, Andrew. Thank you, Jeremy. I will say, Paul and I were so glad that you guys are willing to join us. It means a lot to us and all the dentists. So I'm sure everyone's virtually clapping their hands at what you guys shared with us.
Yes, thank you so much.
I would say this. Yes. Oh, look, there's virtual. Look at, some people are tech savvy. 3 of them know what they're doing. Oh, 4 of them. Look at that. All right. Awesome. Look at that. Dentists can learn new things. Look at that. That's amazing. All right. Awesome. Good job, you guys. Oh, Kevin didn't like that one. All right. So I will say this. Most of you should be looking at your profit and loss previous year comparison, seeing a 25% loss. That should confirm I'm going to apply for PPP 2.0. Confirm with us if you want. Your accountant, Jeremy's here in California. For those of you who are California dentists and you want someone to be in contact with, you want to go through them, you're welcome to reach out to Jeremy. I'm assuming, Andrew, you guys are looking to support dentists as well in your firm?
Yeah. Everywhere but California. California is tough for out-of-state accountants.
Yeah.
Other states, I'll tell you the states we don't do actually. California, Pennsylvania, Ohio with the local income taxes, Indiana, very complicated, but most of the other states we can handle. So
okay. And where can they go learn about the blog and see the information just so they're staying up to date with things?
Schwartz Accountants with an S, nice and long.com. Schwartz
All
Accountants.
right. Awesome. So
Thank you for the opportunity. Seems like a great.
It was great. I just sent Brad a text and told him you were awesome. So.
Oh, Brad, thank you.
Yeah, this is so good. Yeah, so good. And Paul and I are joining forces again at the end of the month for your hygiene departments. So if you want to enroll yourself and your hygienists, your hygiene coordinators in that course, of course, we're doing that right now for the 28th and 29th of this month. And the reason we really want to focus on that, a couple of things Paul and I have been seeing is that, you know, the 6-month recurrence of a low hygiene schedule. Okay. And so we want to fix that. So that's there for you as well. Go ahead, Paula, talk more about it.
Yeah, I was just going to agree. And we have an awesome hygienist, Debbie Lovett, who's joining us, who is actually on Dr. Ted Morgan's team. And how many years has she been a hygienist? 43 or something?
He's got to do the math.
You're
You're muted.
But she's amazing, and she's a team player, and she uses the skills every time. So this is a 14 CE credit course, thanks to IPSO and Dr. Ted Johnson. So we'd love to have you guys join us for Zoom for a couple of days, Thursday and Friday.
Awesome. Yeah, we had other things to get to, like one of those topics that's not very controversial about the vaccine. We were going to talk about that because we ran along other things. We won't bore Andrew and Jeremy with that topic. So we can talk more about that on the 3rd Tuesday next month on the vaccine stuff, and we won't let Ted and Dave argue about it. All right.
That's right.
Anybody have any other questions? It's been great information. Anybody have anything else they want to ask before we wrap up? I'm just scrolling through and make sure I don't see any hands up or anything. Okay, awesome. Kevin, you look darling. Look at you with your glasses, and you look so studious. Look at that. Oh, there we go. Okay, all right. It's great to see those of you who are on video. I'm so glad you guys all joined us, and Paul and I will talk to you more on our coaching calls, and we'll see you next month.
And every
Thank you,
third
Andrew.
Tuesday, every third Tuesday,
Tuesday.
same time, right?
Thank you, Andrew. Thank you, Jeremy. Appreciate you guys so much.
Thank you, everybody.
Appreciate it.
Bye, everybody.
Bye, guys.
Thank you.